Good evening, everyone. Welcome to Crypto Pulse Weekly with Dr. Dane. This week, as usual, we will go through what's moving the market in terms of our market review. We'll briefly talk about the sentiment and an analysis of the markets. Then we'll go, as usual, into Crypto Drip, after which we'll take questions and answers, and we'll close for the day. So let's get started. In the news this week, we've had a number of things, and one of them is the reaction of Bitcoin. It's the semi-recovery of Bitcoin from the lows of lower 10,000, approaching 11,000. We've seen 5% gain today alone, which is like the highest daily gain since the month of July. Also, we see a lot of news coming in terms of regulation and sentiments, one of which is China's blacklisting of local over-the markets. If you followed us since the beginning of the quarter, you remember that we talked about China trying to launch their own cryptocurrency projects and earlier on shutting down competitors. So these over-the-counter markets, like the ones, like Bureau de Change you have in places like Nigeria, are considered competitors to the Chinese government. So they're locking them up, essentially. Probably the government is trying to launch their own main exchange of some sort. In terms of news from regulators as well, if you're not aware, there is a lot of interest in the second stimulus package, which is currently still sitting with the Senate of the United States. So if you're looking for explanation of why we had a sort of a pump on the markets between the month of May and essentially August, partly because of the Bitcoin halving, secondly because there was a stimulus pack that was handed out in April, and instead of spending it, most of people went to buy cryptocurrencies. So there's a second round being planned, and once that gets approved, you can expect to see some really violent moves on the market, as they say. So in the next 2 or 3 days, or no, not 2 or 3 weeks, sorry. In the next 2 or 3 weeks, we expect to see this stimulus package go through. Once it goes through, you will have a lot of buying sentiments because many people want to put in their money into the markets. And because of that, you can expect the price to rapidly gain over the next 2 to 3 weeks, as I earlier said. So fingers crossed, you should expect that we will have some significant action once the Senate of the United States passes that stimulus check. It's not as if the market is only dependent on it, but what happens is once you pass that stimulus check, because some major players are going to get a cut of it, it's going to move the stock market, and then everything's going to start going crazy again. So that's that. In a nutshell, that's what the market is waiting for. On a technical level, as I will show you later, we've sort of crossed a very pivotal technical level, or we have confirmation of the crossing. Let me use that word, and I'll talk about that in a bit. In another news, we've seen Uniswap, our favorite DeFi token, drop almost 50% over the last 1 week, and that's because there's been blood on the market. The stock market has not performed significantly well, and neither has the cryptocurrency market. And basically, what the market is waiting for is another reason to go crazy, and the market doesn't have that yet. So all the pump that has gone into Uniswap and the likes are sort of deflated right now. So that's what's explaining that drop. And as you can see, it's already picking up. On a general note, I think it's a good time to buy, as I will show you from the sentiment, because most tokens and coins are more than I would say more than 40% below their peaks. So if you buy them now, you can expect to make at least 40% gain in the next 4 to 6 weeks. So it's still a good time to buy for any of these tokens, especially Uniswap. Personal projection, I think Uniswap at the peak of this run will probably do like 2K plus. Don't hold me to it, but that's my projection on what I think Uniswap can do eventually. Another interesting news, Norwegian pension fund. For many people that don't know, Norway is one of those small oil-rich countries that have so much money in the sovereign wealth fund, and they're not spending it. Even the ones they don't have in the fund, they're not using it. So, for instance, this one, they have about, I would say, 577, or 77.6 Bitcoins indirectly owned through MicroStrategy, because they own 1.5% of MicroStrategy. And as you're aware from our last week's news, I think, last week or the week before, MicroStrategy has been buying Bitcoin like crazy. And currently they hold about 450 million in value of Bitcoin. So out of that 450 million, 5.6 million, Norwegian pension fund, for reference, has over $1 trillion in its assets under management. So interesting time. Same thing with BlackRock, and I think I mentioned that maybe that was the first, when MicroStrategy decided to buy Bitcoin initially, that BlackRock, one of the biggest hedge funds, was part of the biggest shareholder in MicroStrategy. So indirectly, they already have a Bitcoin play. And it also covers them from a technical standpoint. So they're not buying it directly, but because they own majority shares, they can tell the CEO, you know what, buy more Bitcoins. We think it's gonna blow. So they won't be seen as buying it themselves, but in actual fact, they have a piece of the pie. So that's an interesting news that's going to add more to our volatility in the coming days. I remember somebody complained to me about a transaction a while ago, and I was saying that it's because of the congestion on the Ethereum network. If the Ethereum network does get it right in version 2, I think we'll see some very crazy price movement on Ethereum itself, because all this DeFi contracts and everything else is basically happening on Ethereum's network. So we hope to see some interesting stuff happening to Ethereum in the next 12 months. These guys, the Winklevoss twin, they're the owner of Gemini Exchange. The Gemini Exchange is in the US, one of the big exchanges in the US. This guy is won a lawsuit from Zuckerberg way back, and they bought Bitcoins with most of it. And during the last bull run, by the virtue of Bitcoin price, they became billionaires. So if they've not spent most of the money now, they're close to being billionaires again. I'm sure they're already billionaires, right now, because they do have the exchange, and of course the exchange will have investors. So they recently got the license to operate in the United Kingdom as a financial, how do I call them now? A financial institution of some sort. So they're setting up against the bull run in the United Kingdom, and also planning to obtain a license in Ireland, just in case Brexit fails and doesn't favor them. Basically to take advantage of what's going to happen in the next few months. Another news is a Bitcoin ETF. Let me talk about ETF first, then I'll come back to Bitcoin ETF. So Bitcoin ETF is launching in Bermuda. Bermuda, if you know, is somewhere around the south, the south of the United States, around the Caribbean, and it's home to a lot of offshore companies and resorts and all that. Good holiday destination. And they finally got Hashdex. They finally got Hashdex to launch an ETF in Bermuda. An ETF is an exchange traded fund. An exchange traded fund is a kind of derivative. It's a financial product that is created against the commodity. So the same way you have ETF for gold, for oil, for silver, for copper, for all sorts of commodities. For maize, you have exchange traded funds for all those kind of commodities, but you don't have for cryptocurrencies yet. Of course, we saw this coming, but this is the first of its kind. So Hashdex is a Brazilian company. They've launched this exchange traded funds in Bermuda. Of course, they've not accepted the application in the United States, but the intention is clear and the motive is obvious. They're trying to woo investors into getting into play with exchange traded funds in cryptos. Of course, that's another plus to our overlying macroeconomic story on adoption. So fingers crossed, hopefully in the next 6 to 12 months, we'll hear about another exchange traded fund, probably in the United States this time, depending on how the how the election grows. Then lastly, we had this news on Binance being blacklisted in Russia. And this was because, they said they had some information which was they were not supposed to hold about Russia. And then, 3 months later, they came and said that they're now blacklisted. Of course, they're still rendering services, but the information came out about an hour ago that they're now blacklisted. I don't think it has any significant value for Binance or much, on a global scale, only that they might now have people from Russia demanding, who are their customers, rushing to, finish up on their transactions and probably add more to their positions, because then it makes them scarce. So really, that's it in terms of news review. In terms of overview, market overview, I think the market is recovering fairly well. The drop that we witnessed was because there were uncertainties about coronavirus wave 2, and then the stock market was not sure whether the stimulus package was coming as well. Now that it seems like the stimulus package is pretty well on its way, it looks like we might have another go at the bull run. But having said that, before I go into crypto vital signs, having said that, I think that the market will start seeing some significant price movements between December and January. If not December, then January, whichever one of them is going to definitely be. Before now, we were thinking that the market was going to continue on the peak up until November and drop. Now the market has dropped and crashed because of COVID. So we already had the dip we were expecting. The only thing we might see around the election might be just some volatility, up and down movements, and then the market continues on its way. But generally speaking, I think we will be able to comfortably take some profits in the next 6 to 8 weeks, and then wait for the next jump. So let's get on to crypto vital signs. As always, we know about our equities markets, and between last week and now, we had some gain, but I think most of the gains went into altcoins. Significant gains went into altcoins last week. I would say almost 70 billion. I don't know how that happened, but it looked like all the gains that came into crypto just went straight into altcoins. So right now, market dominance is around 57%, which is a bit lower than what it was last week. So that's where we are in terms of the market position and size. As you will have noticed, we've not shifted so much from, the 300 range in terms of billions market cap for crypto. I expect that we'll start to see some pickup in the next 1 or 2 months. And then we might be closing on the 400 billion range. Now, in terms of technical analysis, this is a 3-day chart of Bitcoin and US dollar, USDT. The reason I brought this chart out is because I needed to explain some fundamentals in terms of technical analysis and explain how that comes into play. Like I said earlier on, Bitcoin is now behaving like a stable asset. It has now become an asset class on its own. And because of that, institutional investors will continue to view it now as an independent asset class and treat it as such. So things like this graph this chart that I'm showing you will become very critical in the months and in the years to come. So if you see this line, it's called a trend line. This is a trend line from the all-time high of Bitcoin in 2018 or 17 rather, up until the one we had here at around 14,000. Now, that trend line has not even been touched since 2000, I think it was 2019. It has not been touched at all until we got here in March, where we dipped. Then we've been coming up. This got broken around August, July, August. That was when the trend line was broken. And everybody was saying, this trend line, once it gets broken, it's supposed to go up. The market is supposed to start, enjoying a very strong uptrend. But immediately it broke up. We saw that instead of just going up, it just broke into a sideways consolidation. Now, that sideways consolidation was enough indicator to people who had long positions to exit their positions. So most people were preparing to sell off. And immediately that COVID scare of wave 2 came, people just started selling off, and you can see that sell off. Now, something important to note, however, is that even though people sold off, it still bounced off that trend line coming from 2017. It's bounced off that trend line and it seems to create another channel. I'll show you that in the next chart, which is the daily chart. But it's bounced off that trend line because that trend line was supposed to hit just around 9,600. And everybody was shouting about it for the last 2 weeks. But it didn't hit it, it bounced off it. And what you have, as shown in the next chart, let me show you that. What you now have is that it's bounced off it and it's almost like created a second channel, separate from the one it was coming from on the daily chart. So this is the daily chart. It's a drill down on the 3-day chart that shows us how the market is moving. So these two bands are what you can call an ascending channel, which is usually used to describe the range of prices. And because a lot of robots and a lot of algorithms and a lot of automated trading follow this technical analysis, once the market structure plays according to that, once the price action plays according to the market structure, the price starts to behave in an almost invariably predictable way. Let me use that word. So, and that's what's happened here. So the market's done up since March, following this ascending channel. It's broken the channel at the end of September, which is what we have here, creating another downward trend line. Now, it's touched down on that long-term trend line we talked about from 2017, and it's also consolidated here, creating another set of support. What is now happening is it's tried to break back into the channel it came out from. It's not succeeded. Then it's created another channel by bouncing off this. Now, this bounce is very significant because it means, I will explain it now, it means that the longest term moving average of price for Bitcoin has held as a support for the price. A support is usually price consolidation below the price action. So here you have a lot of buy demand. People have bought. So this long blue line coming all the way here, that's the longer term moving average. The shorter lines are the short and the medium term moving average. So this long term moving average now has stood as support 3 times, for more than 3 times, here, here, and here. So what that means is if the next 3 days, if the price action continues to follow this trajectory, we are sure in for another go at our bull run, because everybody who's holding short positions will drop their positions and face the buy position. One thing I need to mention though is that, and it's one of those things that I'm going to talk about today under our crypto drip, about forces moving the market. You see, because the government cannot control what's happening in Bitcoin, and the government cannot extract the already buying Bitcoins from people's pockets. So they have to create infrastructure and frameworks that helps them to manipulate the market from behind. Part of that infrastructure is what we've seen happen in the last 1 year, meaning granting access to Wall Street to offer crypto to customers. Because they can offer crypto to customers, they are now starting to create futures and options for Bitcoin, and they are working on creating derivatives for Bitcoin. What are those things? Futures, options, derivatives. To tell you the fact, I don't want to use the word scam, but they are fake products that help them to manipulate market price. I shared some video on the CryptoPulse WhatsApp group earlier on the week about the manipulation of gold and the price of gold. It's the same thing applied. So if the government sees that people are getting too much comfortable with this particular asset class and they're devoting money to it, especially the United States government, they will look for a way to get into play. And one of the ways to get into play is to bring Wall Street and the big hedge funds. So the bull run we're going to have this time is a two-edged sword, in that we're going to make a lot of money from it because they're going to pump a lot of money into the market. But also, the market is going to become more predictable. It's just going to become like, in another 10 years, the Bitcoin or the cryptocurrency market is going to largely be like the US stock exchange. The only thing is that there'll be a lot of decentralized assets. But for things like Bitcoin, I can bet it that the government will be creating more and more derivatives to push down the price of Bitcoin. So for instance, in the derivatives or the margin trading for the biggest platform, they have Bitcoin short positions. No, those are products that are created on the exchange to press down the price of Bitcoin. They're not doing anything other than telling people to come and buy against the price of Bitcoin. So they're not buying Bitcoin, they're just buying against it. So they're not really buying any asset tangibly, they're just betting against the price of Bitcoin. So when you see the market drop sharply, it's because a lot of people have artificial assets betting against the price of Bitcoin. So in as much as the amount of Bitcoin cannot increase, you can't do anything to that. The only thing they can do is to tinker with the price, and that's what's happening. The price is bobbing up and down because people are always loading up short positions at every opportunity to push the price down. But you can only push the price down for so long because the supply is limited anyway, and you're not going to do anything about that. So it's a matter of time. As I said earlier on, I expect that based on this line that we have now, we should be inching closer to 11,000 in the next few days. If we are able to break 11,200 in the next 1 week, then we can comfortably say, yeah, maybe we're good to go to 12,000. Some people have already said 15,000 actually, but fingers crossed. Once we get to that point, I think once we get to 15,000, we can take profit on some of our existing positions. I mean, even if it's 10% profit, we can take them out and have a nice time till December, when the price will probably retrace a bit before going further. This is our what I call humbling chat, or I call it humbling chat because the chat reminds me that I don't own the market, and it reminds me where I am in the market. And because of that, I use it to set myself straight to say, we're in a cycle and you shouldn't get carried away by the market. I usually give an example of someone who goes to the market to sell bananas, and other people are selling bananas. Then somebody comes to your store, you're selling banana. Then they start juggling your banana. And everybody comes around enjoying the show. And while they're enjoying the show, you also are enjoying the show instead of selling your bananas. Meanwhile, your compatriots who brought their bananas are already selling their bananas while you're enjoying the show. At the end of the show, you still have all your bananas, and those other guys have cashed out. That's what this market is about. You need to know when to cash out, and you need to know when to get in. That's the real genius of profiting from any form of investment. And the cryptocurrency market is not the same. I mean, it's not an exception to that. So here, as I said, we've passed the hope of recovery, and we are right here. As I said, we are here at the bottom and at the crux of the optimism hill. Once we gets to 18,000, we're going to be in belief. And by the time we cross 18,000 and hit 20,000, I tell you, we're in a thrill, because by that time, every news agency will be talking about Bitcoin and how Bitcoin has hit 20,000. Then more people want to buy Bitcoin because, of course, they'll be hearing from last year that Bitcoin is going to blow. Now Bitcoin has blown. So you can expect a very wild ride, especially from 18,000, because once it's at 18,000, people were already pricing that this thing is going to get to 20,000. Let me quickly buy before it gets to 20,000. So it's just a matter of time before it closes in on 20,000. And once it closes on 20,000, I don't know, it will be a difficult ride to come back to the levels we're seeing it today, which is the 10,000 range. The same way he went from, what was that, 3,005 or thereabouts earlier in the year to do 12,000, and it's not gone back. So even with this dip now, the market recovered from that 3,000 because of COVID. COVID is an unprecedented scenario, and the market recovered in less than 6 weeks. So now everybody knows that the market has resilience and is able to recover. So I don't see the price going below 10,000, honestly, ever again. Projections for Bitcoin, anywhere between 50K and 100K in the next 1 year. So let's go on to our sentiments. So in terms of sentiments, this is where we are today. Last week, you could see that we were in the fear region. Last week we were on 44. We were dangling between 44 and 49, which was neutral. Now we're down in the fear region, and as I say, when you see the market in the fear region, it's a good opportunity to buy, because it means there are not many buyers on the market. You're supposed to do the opposite of what the market does. That's the way to profit from the market. So yeah, we're in a good position to buy. In a few weeks' time, I'm sure we'll cross over to the greens and be on the grid part of the graph. Then in terms of technical analysis for the dashboard analysis, this is what it was last week. And I just brought this up so that I can show you the difference. So intraday meaning 4 hours. Intraday last week was sell, and daily last week was buy, as you could see from this chart. But if you go to this week, you see that we have now moved to buy on both levels, meaning both the intraday sentiment and the daily sentiment are in approval of entering the buy position. So a good buy, even though I think last week will have been the best opportunity to buy, but it's still a good opportunity to buy because it's still less than 11K. Like I told someone, you might want to start stacking up now, because by the time it becomes mainstream, it's going to be very, very, very difficult. We already have issues with Ethereum network now because of scalability and because there's so much volume on the network. So I expect that we might see some of that in the coming weeks and months. So today on Crypto Drip, just one thing we're going to talk about before we go into questioning today. I hope to finish a lot faster today than usual. We're going to talk about market movers, things that move the market, and I'm going to explain why each of these move the market, just so that when we see price movements that look horrendous or scary, we can easily tell where it's coming from. So we'll talk about price movers today. Today, usually what you see as price movers circle around the names, because that's where the fundamental analysis come from. And what are the things that make up the names that move the price? The global stock markets, the price of gold, the economy of the world, the whales, institutional investors, and margin traders. And I'll explain each of those ones. I should have put the whales forward, but I'll explain. The stock market, because institutional investors are now involved in cryptocurrencies. And since the involvement of institutional investors in cryptocurrencies, we've noticed a reduction in volatility of Bitcoin, generally speaking. So it appears that the institutional investors are using Bitcoin as a hedge against their stock market position. I'll explain what I mean shortly. When you have a buy position on, let's say, a stock like Tesla at $300, and Tesla suddenly drops, like what happened recently, Tesla suddenly drops 200 or 150. If you had a buy position, you will have set a stop loss or something on your position. As a normal retail trader, the institutional investors usually don't set stop loss. The reason they don't set stop loss is once you set stop loss, you close out your position at a loss. So what they do is they try to either add more money to that position so that they don't close out at a loss, and when the markets reverse, they are able to recover all in profits. Or they hedge with a counter asset. So a counter asset like Bitcoin that doesn't normally move like the stock market. So they take money from the Bitcoin market or the cryptocurrency market and use it to fund the position on the stock market. And as I explained severally, that's usually why every time the market seems to shake, the stock market seems to shake now, especially this year, you find cryptocurrencies dropping. That's exactly what's happening. They bring in a lot of money prematurely or temporarily into the cryptocurrency market in billions as a hedge against their position on the stock market. So if those positions are going suddenly or rapidly bad, they push back the money into the stock market to sustain their position. When the positions go back on the stock market, they send money back to cryptocurrency market. So that's the game they're playing with the cryptocurrency market. In terms of gold, gold is now, or I would say Bitcoin is now correlated with gold in terms of price. And that's because more and more investors are seeing Bitcoin as an asset class very close to gold. So there's a lot of correlation between Bitcoin and gold. And that's been happening since last year. So if gold market rises, it's because confidence in the US dollar is reducing. And because of that, Bitcoin is also rising. We all know the world economy is bad. The market will shake. Before now, the market didn't used to shake for Bitcoin because it was just geeks and early investors and early adopters that were in the market. So they had their hodlers. They always hold their coins anyway. So they didn't have any problem. But now, because you have institutional traders leveraging on the cryptocurrency markets, the world economy will always shake the markets. So what are whales? Whales are people who generally have very large stash of cryptocurrencies, especially Bitcoin. But yeah, cryptocurrencies across board. There are people who have thousands of Bitcoins in their bags. I mean, early adopters, people who've cashed out a lot in the last bull run on Bitcoin. People who are miners, heavy-duty miners who have huge stash of Bitcoin. And why are they considered whales? They're considered whales because of the size of their portfolio. And if they move, so let's say someone has 50,000 Bitcoins in their asset bag, and they decide to move 5,000 Bitcoins to an exchange. Because there are so many technologies and companies right now monitoring what's happening on the blockchain, everybody immediately sees it that, whoa, that was a massive transaction that just happened. It takes the same time for 50,000 Bitcoin to move as 5,000 Bitcoin, but there are already programs and tracking mechanisms in place that shows when those kind of movement takes place. So when those kind of movement take place, especially when it moves from, let's say, an unknown wallet into an exchange, there is an indication to people that somebody's about to sell off their Bitcoin. So people start selling their positions in anticipation so that they don't leave their position at a loss. So if somebody says, oh, whale alert, we saw so amount of Bitcoin moved to so exchange, everybody who has position on that exchange will try to sell their Bitcoin, because it might mean that whale wants to trade their Bitcoin for other cryptocurrency or for fiat money. So that's one of the reasons why whales move the market. And of course, whales move price action. So if you have someone takes, let's say, 5 Bitcoins or 12 Bitcoins and buys another altcoin, definitely you're going to see a price action movement on that altcoin. Definitely. At least 2 upward strokes of green candle will happen on that coin, because one Bitcoin, let's say against a currency like XRP or VAT, is significant in the volume, the daily trading volume. It's usually like 10%. So it's going to move the market. Another thing is institutional investors. I think I've explained institutional investors and what they are doing in line with the stock market. The last one is margin traders. Who are margin traders? Margin traders are people who are not interested in Bitcoin itself. They're just betting on the price. It's just like the same thing you are doing in Forex trading. In Forex trading, you're not interested in buying US dollar or buying Japanese yen. You're just interested in spread betting. You're betting on the price changes between those currencies. So in the same way, margin traders are like spread bettors who are betting on the price changes between, let's say, Bitcoin and USD, or Ethereum and USD, or XRP and USD, and all that. So those are, they're like Forex trading. They work on what you call margin trading. And what happens in margin trading, I think I've explained it before, is that you are borrowing money from the broker to make the bet. If you win, you'll be very happy. If you lose, you may have lost all your money. It's unlike spot trading. So margin trading is different from spot trading, because in margin trading, you are borrowing the broker's money to trade. It's like going to the casino and you say, this is 100K. I want to trade. Can you give me 500K? They will say, yes, you can give you 500K. Your 100K is collateral. If you win your games on the casino with the 500K you borrowed, we'll give you back your 100K, and you can take the profit and return our money back, our own fraction of the money back to us. But if you lose, you might as well lose all your money. So that's what margin trading is. But a lot of funds is being devoted into margin trading because it's a good opportunity for institutional traders to play the money game, and they like to play the money game. And of course, for people who are, savvy Forex traders who like to also play in the margin trading space, it's also a good opportunity for them. So they push in a lot of money. In fact, the amount of money in margin trading at some point was more than what was in market capitalization of Bitcoin itself. So it's usually a very significant market mover. And as I said, because most people the institutions, especially government-backed institutions, are trying to push down the price at any possible time so that they also can buy cheap, by the way. So you always have heavy positions in the shorts. And that's why the market crashes suddenly when there's a bad news, because the heavy positions that are shorting the market, apart from people who hold buy positions that are selling. So those are the main market movers. And I thought it's important to explain that and to explain what has happened to the markets in basically the last 3 weeks. So we expected September to be a climb up until October to the US election. But what has happened was there was COVID scare, then there was some mixed messages from the Fed, and then the stimulus package that was supposed to have come since August did not show up. And it was uncertain whether we're going to get the stimulus package, this US stimulus package or not. So the market just dumped everything they were doing and sold off whatever profits they had. And that's what's caused the crash. The market should recover in the next 2 to 3 weeks. There might be another dip, but definitely by the time we're having the US election, I expect that the market to be in full swing, because I understand that the Senate has agreed to sign the stimulus package. They do have the necessary backings they need, even though I understand also that the Democrats are trying to block them from signing it in lump sum, and they want to break it down into smaller bits. But over and above everything, the general consensus is that they're going to sign. And Oga Trump has also said he will issue an executive order. I think he has some executive power to issue an executive order for some part of the money. So he's also said he's going to, pump out the money if they're not moving on time. And I mean, it's to his own advantage. If he pumps out the money, people will vote for him that at least he gave me money. another advanced Nigerian ballot rigging mechanism.
William Van.
So that's what's happening to the price. Then in terms, I had an announcement I wanted to make. I have a masterclass next week, Saturday. And in that masterclass, I am planning to sort of explain, as is everything I know in cryptocurrency markets, within a space of 3 hours, and also help people set up for 2021. So if I had someone asking me, I think last week, saying this bull run I have been talking about since December and January, why are we not seeing the bull run? What's going on? So I said, calm down. That you need to be calming down. The bull run has started, but the reason it's not apparent is because we're still in an average price range. This is usually the price range that Bitcoin sits at for a long time. And even before 2017 bull run, it was still sitting around 10 and 12K for a significant amount of time. So I told the person that if you factor in COVID and all the things that happened this year, we're actually doing very fantastically well in terms of how the cryptocurrency market has performed. So I have this set up for next week. The course itself is valued at 100, and the in-person course was originally, I think, 1,200, but because of COVID, became 120 pounds. But I'm giving discount to everybody that's a subscriber to CryptoPulse to pay 30 pounds. Anybody that's not a subscriber, of course, has to pay 60 pounds to attend the lesson. It promises to be a very useful time, and definitely will be worth your time. I also would give some price projections for next year, and if you will, parts to financial freedom next year. It sounds like a joke, but to be honest, I think many people will become billionaires next year. Many of us will become multimillionaires, but you need to be prepared for it. That's always been my mentality. You need to be ready for it. The Bible says the wealth of a fool, or the prosperity of a fool, destroys him. And the reason it does is because the fool doesn't have a frame of mind to harness the wealth and the capital gains that suddenly happen upon them. So it's important that you have that discussion, and you set yourself up for that frame of mind, so that when the time comes, you'll be able to trade your plan. Let me use that word. There's a saying that goes, plan your trade and trade your plan. So for you to be able to make the most of the bull run, you need to plan your trade, and you need to trade your plan, because when the price starts going up, you might get into the illusion of, as I showed in that market cycle chart, you might get into exhilaration and believing that the market is never going to come down, and Bitcoin is doing 100K and everybody is going crazy, and you are seeing millions and millions in your account, and you can't just imagine that you're going to sell out any position. You need to be prepared to take some profits. You need to be prepared to know what you're going to do with the profits you're taking, and you need to be prepared to take positions in terms of diversification. And I'll also talk about some long-term cryptocurrency opportunities that I've seen on the market as well. I think people can plug into that will provide significant yield over the next 5 years. It will provide yield over the next 1 year, but I'm talking about longer term investments that you can put some money in now and just leave it there, and will be significantly important in returns in the next 5 years. Like someone said to me, I think that was Monday or Tuesday, and she was wondering if she could keep her children's savings in the bank. I was like, well, you don't need to keep your children's savings in the bank, because it's not yielding interest in the bank. And you're actually putting in the bank against the depreciating asset, because our currencies are depreciating by the percentage of inflation every year. Nobody talks about it, but when they say inflation, that is the percentage to which the currency is being devalued every year. So the currencies are getting devalued every year based on inflation, and it's important that we take a position to hedge our portfolio and ensure that we have enduring assets, something we can pass down to our children. That's it for me today. If you have any questions, do hit me. Oh, somebody sent me a question in the beginning of the, yeah, somebody sent me a question in the beginning of the session. It said he wanted me to comment about XRP and XLM, Stellar Lumen. Well, Stellar Lumen and XRP are good projects. I think I had some Stellar Lumen earlier in the days. I still have some. I think I still have a few. They're good projects, but they're old projects as well. So people are not too excited about them because they've been around and we've not seen them perform any magic in recent time. XRP especially. So XRP has a lot of tons of news coming out of XRP, but it rarely moves the market. And on top of all that news, I mean, it just appears that the thing is just sitting down there, not moving at all. I mean, in terms of collaboration, corporate involvement, corporate partnership, XRP probably has one of the highest so far this year. So you have banks talking about using their technology. You have, global institutions talking to XRP on using them for. In fact, I hear the EU itself is talking to them about using their platform for, interbank currency transfer. But on top of that, nothing is happening. So for me, from a annual portfolio performance perspective, I think XRP, in fact, it's one of the most underperforming assets I have bought in the last 9 months. I won't lie. XRP. At some point, I had to sell some of my XRP to buy other things. XRP, the underperforming assets I've seen this year for me, XRP, Crypterium, they significantly underperformed the markets. And because of that, if you want to buy XRP, don't buy with the intention of selling next year because I don't think it's going to be fantastic. The all-time high for XRP is around £1, $1.76 or something like that. I'm not a huge fan of XRP. Good use case. They do have, they do have good use case. They do have good technology and all of that. But frankly speaking, they're not. I mean, I don't know why they're not inspiring any investor sentiments. So instead of buying XRP and XLM, so that person who asked that question on Twitter, I'll say you attend my webinar on Saturday. I'll give you some very solid coins. Guaranteed, those coins are going to make you money. If you have enough money, they can make you a millionaire. I'm not joking. Those are high-powered tokens that they're gonna really blow up. And I'll give you the reason why. I mean, the reasons why they're gonna blow up as well, because it's just it's a given. It's a given that they're gonna outperform the markets. Many of them are quite new. They have new technologies, and because they have new technologies and the adoption has been high, definitely you're going to see a lot of new interest in those tokens. So if you want to hold XRP, you can hold XRP, but don't expect that you're going to make more than 10x or 5x over a long period of time. The XRP I bought in February has not performed significantly. In fact, I'll look for it. Just give me a second, please. I need to find that XRP on my portfolio, and I'll show it to you so that it won't look as I'm just talking. Oh, where is this? Where is this? XRP. Yeah. Yes, okay. Yeah, I'm going to show you on my screen now. So this is my XRP portfolio. I bought it in February. I mean, most of these dates are wrong in terms of when I actually bought. I bought them in February, and it's still sitting at 75. I mean, 30% loss. it's not a well-performing abeg. I'm not interested in something like Jesus said. If you can't if you can't produce park well, it's a good project, no doubt about it. I'm not just in it for a good project. It's true now. I'm not in it for a good project. I'm in it for something that's giving returns. So for that person that asked that question, consider CRO, for instance. CRO is a baba when it comes to return on investments. So that's all I have for today. Oh, Tibanki. So sorry, was you, Tibanki? Yeah. So Tibanki, if you have deep pockets, you can hold the XRP till 2022 or 2023. By that time, maybe all the projects that they have will have come to pass. They are long-term projects, fantastic projects. But hold on a second. I need to show you something now that I mentioned it. Something to consider when you're making investments. I'm already giving you some of the projects for next Saturday. But something to consider, I'll give you nevertheless. Something to consider when you're making investments in cryptocurrencies. And I think we've mentioned this before, especially altcoins. Let's pick your XRP. XRP, market cap, 10 billion. Circulating supply, 45 billion. Now, circulating supply of 45 billion is against a total supply of 100 billion. What that means is that for you to arrive at, if let's say 20 more billion comes into XRP, you're probably going to see XRP sitting at around 50 cents. 20 more billion coming to XRP, 50 cents. Oh, yeah, 10 cents, sorry. If 10 more billion come to XRP, you're going to see it at 50 cents. However, if you take that same amount and push it into something like this, Polkadot has 825 million as its total. That's the total. That's what's issued. Now, if you push that into Polkadot, that's times 3 plus of Polkadot. It's a game of numbers. So I'm not in the market for token, what do they call it now? Token support or token fanship. I'm in the market for profits. So anything that is not making profits, except I know that it's going to make profits at least in the next few months. But if it's not XRP is a real solid platform. Everybody should be screaming, about it. But one of the things I think is going against XRP, apart from that huge supply, is also the fact that they are partnering with governments. And of course, the spirit of crypto is the spirit of decentralization and rebellion against the government. So I guess that's why people are not buying into them. But that's that. Stellar Lumen is an old project. I'm not interested in it. So look for newer projects if you want to make serious money. So next question before we round up.
Dr. Lalere should buy all our XRP.
Ah, okay.
Buy from us, I mean.
you know, I didn't Nigeria, you there UK.
Sorry, Dr. Lalere, me, my meeting,
no.